Hello, everybody. Welcome to this week's Middle Class Investor. This is Seth Martin. It is July 30th, about 4:45, so Sunday, and we're here looking at the S&P 500. We had kind of a nothing week. Nothing kind of went up, then back down. In the S&P 500. You can see here, made this little cross looking thing, and that is called a doji, and usually is a sign of indecision, and sometimes can mark a top, a shorter term top, before a reversal. So we've been talking about that, I think, maybe ever since it started doing this, like that this was going to go like this and then down, kind of like an ABC, like I always talk about ABCs. So, I thought it was going to maybe do this. Never did do that. It just kept going up. So, it's possible it could go down further now, but it also looks like 5 waves have completed. So what I would say about this is the tricky part of trying to figure out where the top is this 2 right here is proportional to this 4 sort of, but this 4 looks kind of small, so I don't know. I mean, I think this 4 is probably proportional to this 2, but then this 2 here, or this 2 here, we never saw a 4 that was equally large. So I don't know if we're gonna see this roll over and bounce, or if we're just gonna see it roll over. I mean, I think we're gonna see it roll over. The question is it going to bounce to new highs or not? And it's just difficult to say because the wave patterns could be complete just by looking at them the way you look at them, or there could be another down up sequence, and unfortunately it's hard to tell this time around. So from a risk management standpoint, it's a great time to just take some money off the table, in my opinion, and I have in my accounts. Because we've talked about this before, but the market takes the stairs up and the elevator down. And so, just the reality is all this slicing and dicing and chopping and just grinding higher, I mean, it could all be over in a week or two. I mean, it literally could give it all back. So you just have to be careful with that. All right, let's look at the short-term interest rate. We had a pullback in short-term interest rates, really the first one since this one, and you can see here there just haven't been that many in this 3-month Treasury, which tells me that the Fed is behind the curve and is probably going to be trying to play catch up. Now, a lot of people don't think the Fed's going to raise rates again until maybe December. But this chart really says that they should be raising rates, or else they're going to get behind, and the balance sheet's going to get all messed up. But that would make more sense because the Fed is usually miscalculating on all these things anyway. They usually are wrong about interest rates, even though they're so closely monitoring them and everything. So I think the odds are probably the Fed raises more than just once this year, but we'll see. We'll see. The talking heads aren't always wrong, so maybe they'll be right this time. All right, let's look at the 10-year. Let's look at the volatility index real quick, because we did hit a low last week, something like a 30-year low. This is a 30-year low in volatility. This week right here, where it pierced this line, This was a 30-year low in volatility. That means there's a lot of complacency in the market. And and what that means for us really is that let me see if I can get this off of here. Pushed a button that I shouldn't have pushed. Happens more often than I want it to. And I don't know if I'm going to be able to get this off or not. There we go. Okay, so for some reason I hit some sort of quick toggle that gets me into another tab. Anyway, periods of low volatility are followed by periods of high volatility, which sounds kind of stupid, but that's the reality. So we were talking about maybe volatility kind of just bouncing back and forth into this triangle and then busting out. So we'll look for that to happen. I bet you we're closer to it than you think. So I would just be on the lookout for those kinds of changes. All right, here's the 10-year Treasury. It was up last week, but only slightly. So we've pulled back into the zone, closed the gap back here, and rallied up. Now we've pulled back. I mean, this could be one. This could be a large, a two here, and then maybe there's three, or we could be coming down to a new low just below this low. My gut feeling is that the low is in, but this pullback, as you can see here, it's not even a 50% pullback, so that's unusual. I mean, you usually want to see 50%, and really even maybe the 62% pullback. But it's possible this could be the move off the low here that's going to lead us to a large move in wave 3. So just be careful if you have bond funds. Make sure they're short. Don't have bond funds, but if you have bonds, make sure they're short duration. And be careful with these interest rates because a 3 or 4% move, 5% move in interest rates can cost you 20% in your account. So that's the tricky thing about the bond market. All right, let's look at a couple of these countries. We've been looking at let's look at Germany first. Germany looks like it's still trying to grind its way up into this decision area resistance. Japan's already up there. Looks like it wants to make a new high right in here. Excuse me, my nose is just running all of a sudden. The UK is inside this channel and grinding its way higher, but could have topped back here. I mean, this looks very toppish here. Looks like it could have made 5 waves up into this, and then this was kind of a an A, B, C correction right here, and then down. So we could be just about at the end of this correction. Might touch the channel line one more time before it rolls over. But if you're in the UK and you're trading your FTSE, the FTSE's your index that you follow, be careful in the FTSE. What else do we want to look at? Yeah, that's about it over there. Let's switch over to TOS charts and let's look at some charts here. Let's look at oil first. I haven't looked at oil. Seems like we're not looking at it consistently. Oil looks like it kind of wants to follow the lines I've got drawn here. It's kind of chopping around. No real clear direction, which means it's in some sort of corrective, pattern. And if it goes up right here, this area here should serve as a decision point area where the market might decide to turn around and go lower. So from right here, you could maybe see oil going to here. If it rolls over early next week and starts to move down, we're going to be looking for support here around this 38, 39 area. All right, so that's oil. Let's look at the euro. So the euro has been just red hot. I mean, this is one heck of a move from this consolidation area. I mean, that just right up there. And those are weeks. So that was 1, 2, 3, 4, 5, 6 weeks, and 5 out of the 6 were up weeks. I mean, that's something there on the euro. Question is, what should we be ready for on the euro? In the near term. Well, we're in an area where it could turn. It could go a little higher here. It could get a little deeper into this yellow, but we should see a sell-off very quickly after that. So I wouldn't necessarily be long the euro long term. It might go up early next week, maybe a couple, 3 days, but then we should see some sort of sell-off in the euro that takes us in this direction. Let's see what we have. Let's look at the British pound. It looks like it's staying kind of in this triangle consolidation. And if it does, it's likely to roll over, and I don't know about make a new low, but certainly come all the way to this decision point here before going higher. So, excuse me, I've been talking to you about the FXB. Let's switch over here real quick. Whoops, I don't know what that screen got all out of kilter there. So the FXB is the ETF that I was talking to you about, and I've got this decision point here, and I mean we could go up and actually get into this decision point before we roll over. The reason I like to look at the actual pairs, is it gives us a better view of what could be going on here. I mean, this could be an A, B, and then C, with the 1, 2, 3, 4, 5. This could be like an ending diagonal. It doesn't look like a very good one, but it could be one. And therefore it might not make it up to this area around 1.35. I still think the FXB is a good trade, but maybe we're there a little too early, and maybe this has got to go lower again, maybe just a hair lower than this previous low before we get that longer term rally in the FXB slide. In the FXB follows the British pound US dollar. All right. Why don't we let's look at gold and silver. The dollar is very, very close to the end of its move, just like the euro is close to the end of its move. And it looks to me like the euro is going to be rolling over and going lower, and the dollar is going to be bouncing and going higher. Now, gold is sold in dollars on the gold market, so at least in our markets. So if the dollar looks like it wants to go higher, then gold's likely to go lower. It might make a little, one more up right here, and then roll over and go lower just to this below this low, or it might go all the way up here and then roll over and go lower. I think the dollar is too close to the end of its move for this to go all the way up here. I think we're looking at maybe just a slightly higher than this, and then a rollover back down to here maybe. I don't know. The weird thing about gold and silver is they look a lot different. You can see the low here on silver came down to just below this pivot, but when you look at gold, see, we didn't get below the pivot. So that tells me that gold, probably going to bounce a little bit more and then roll over and find some sort of support below this low here. I don't know. It's hard to tell. When you look at it, it could go, it's a 50-50 at this point because there's no clear, this is all corrective looking, and so there's no clear waves that tell you what direction, the market's moving. Let's see, what else could we look at? We got all these pairs in here. British pound, Japanese dollar. We looked at silver, euro, US dollar. Yeah, that's really about it. Wish my Ninja Trader was working because I would like to show you guys a couple things in there, but I'm having problems with it right now, so I'm not gonna be able to show it. I'm keeping a close eye on this British pound US dollar and then the euro US dollar. I think these are potentially some decent opportunities. Euro US dollar, once it quits going up, it's going to roll over and come down. Great British pound slash dollar, if I can find it here. Yeah, right here. May have already bounced, but it could pull back to the support area and then bounce really hard and fast. This looks very overlappy to be the bounce. I mean, a lot of times you'll get another bounce when it's this kind of overlapped and congested. So we might come down a little bit and then rally up to the here. So keep an eye out for those different scenarios and see what you think. Let's see, is there anything else I want to look at? Oh, I guess not. That's a pretty good place to stop this week. Definitely the market, the internals of the market were fairly weak, which could indicate that it's getting tired. The VIX was very low, which could indicate that the market's getting tired and doesn't have a lot of appetite for much higher results. So just keep a lookout, for some weakness, and then try to get on board with it. That's the best advice I can give you. Probably is just watch the markets closely, look for a little weakness setting up, and then get in gear with it. All right, everybody, that is probably it for this week's Middle Class Investor. Enjoy coming on here and talking to you guys about the broad markets and trying to, see what we need to do to improve everybody's performance in the market. So thanks for coming in, and we'll talk to you next week. Bye-bye, everybody. Take care. Bye.